A very good afternoon to you. Let's take a look at the markets. Asian stocks lost ground today, although Hong Kong and China markets registered positive gains on the trading day. And that's despite US authorities clarifying that import duties against China now stood at 145%. The yen surged against the US dollar, which is negative for Japanese exporters, making their goods less competitive, which adversely affected their stock performance. South Korea's Kospi and Australia's SAX 200 also registered declines. The Nikkei share average declined by 2.96%, let's call it 3%. The Hang Seng Index rose by 1.6%, while the Shanghai Composite Index closed up 0.45%. The historical relief rally staged on US markets was short-lived, with all three major indexes slumping in yesterday's trade. Market experts on Wall Street said that the White House had not done enough to dispel tariff uncertainty, while at the same time the intensifying trade war between the United States and China continues to cause jitters, as if both countries come under economic strain, it will affect the rest of the global economy. The Dow Jones Industrial Average declined by 2.5%. The S&P 500 fell by 3.5%, while the Nasdaq Composite Index tumbled by 4.31%. Looking at our local indicators, we see that the all-share index is making a slight turnaround. It's up 0.4% at 86,408 index points. The rand is firmer against the US dollar, trading at 19.33 against the US dollar, and it's, 19.33 against the euro, and let's start again. So the rand is trading at 19.33 against the US dollar, 22.03 vis-a-vis the euro, and 25.31 against the British pound. In terms of commodities, we see that the price of gold is jumping to $3,228 an ounce. No doubt that's an all-time high. Platinum is trading at $944 an ounce, and Brent Crude Oil is trading at $63.81 a barrel. All right, to unpack the markets for us, I'm joined by Warwick Lucas. He's the head of private clients at Vunani Securities. Warwick, thank you very much for joining us, as always. So Wednesday was a crazy day on US markets, with major recoveries registered on the stock market. The likes of Nasdaq coming up 12% on the day. But that's all unraveled in yesterday's session, from the very beginning of the session when they opened in negative territory. Does this suggest that market players had more time to think about the implications of what Donald Trump had said, and that in fact he's merely postponed his policy?
I think there's going to be a multiple of outcomes here. I think, for one thing, the relief rally that was involved there was quite important. I mean, we all saw Trump with his little board of different countries' tariffs, which were, of course, a bit of a work of fiction. And we all know that they're fiction, but of course he's a showman and he can't help himself. So, yeah, we had that relief rally that at least there was going to be some kind of talking on the table. But the implications are that there still is some kind of interim tariffing in place in the first instance, and secondly, then there is obviously a process that's going to have to be undergone. Now, the fact that Trump has basically indicated that the process of tariff negotiations is going to be handed over to Scott Bessent is obviously quite heartwarming. Trump only likes things that are fun, like disrupting the world. But Bessent, I think, is a competent pair of hands to look after it. What is the kind of end game that the US is looking for? I think we've seen it before in 2018 when Trump basically flagged 0 for 0 of tariffs, i.e. if you have no tariffs, I'll apply no tariffs in turn. And in theory, that is an economically very desirable outcome for the world in general. Tariffs are frankly an outdated and very inefficient form of taxation, and the world would be better to see tariffs gone everywhere. However, the manner in which Trump has attempted this is, not to put it bluntly, quite horrid and counterproductive.
Indeed. So do you get the sense that a significant number of investors are continuing to shy away from US treasuries? And does this explain why we're seeing the surge in the gold price, with some pundits now talking about it reaching perhaps $3,500 an ounce in the not too distant future?
Well, I would say in terms of trying to pick a number, I mean, well, it could possibly do all kinds of things. Inflation is a concern in relation to tariffs. Bonds going to higher yields is clearly indicating a concern about tariffs. You see, the issue with tariffs is if there was to be a higher tariff scenario that came out, obviously that requires implementation because your whole manufacturing and supply chains have to be re-engineered, and that is a scenario that the market's trying to price for. It is, however, a scenario that we don't know that's going to happen because part of the problem is I think we've seen a bit of good cop, bad cop being played in the background here with different signaling coming from both Trump himself and then assorted close friends passing differing opinions on Twitter/X. So you didn't know what is the dominant theme. I think most people think that Trump wants to tariff. I think he would prefer 0 for 0, to be quite honest. And I think our government has conducted themselves sensibly in that score in basically staying quiet while the bullets flew overhead.
Yeah, indeed. So when markets were falling really badly, the Sasol share price went right down to the low 50s a share, which seems quite unbelievable given where that share price has once been. What's your long-term diagnosis for Sasol, and what's your take on the underlying oil price, which has been subdued of late?
Okay, so I mean, it operates in a very difficult environment already. The prices aren't great for it. Sasol is most highly geared to the rand more than anything else, however. And then also they've got interest rate issues there. I mean, in a lot of respects with their gearing, I'm afraid they're a little bit of a call option on the oil price and the rand. And to be honest, the environmental or mooted environmental taxes on them are something that government actually needs to think through very carefully. I think being such a big employer and an otherwise relatively efficient manufacturer, I think we want to think quite carefully before we hit Sasol as hard as the initial tariffs or taxes that were mooted.
Yeah. One last quick one, Warwick. It's been, of course, a very speculative week around the survivability of the GNU or its shape or form. From where you sit, how important is it for these guys to sort their differences out?
Okay, so when a family's fighting over what's for dinner, they should basically resolve what's for dinner before they go on to fight over the TV remote. And this is the exact problem that we've had the GNU, is that they didn't stay focused on the topic, and the topic was the budget. Look, I think the DA would have done much better if they had focused on a better outcome, i.e. that we got more bang for buck, more performance management out of government departments that have not been well run. At the same time, I mean, I do understand that they didn't get good signaling from the ruling party. They basically got ambushed, and there's a lesson here that relations need to improve. The GNU breaking apart, we cannot afford a weak GNU that's basically running on a 50% plus one. That's very weak. It will fall apart then on some other issue. We can't carry on like that. So a strong GNU needs to be protected at all costs.
Always appreciate your analogies. Thank you so much. Warwick Lucas, he's the head of private clients at Vunani Securities.